This is the countdown to the open. I'm Alex Steele in for Jonathan Farrow. So we're moments away from the start of trading. Let's look at how we're set up here. The NASDAQ 100 futures are up by about 0.9%. It is definitely going to be a tech rally today led by NVIDIA, but small caps are trading a little bit heavy, which leads me to other asset classes. So switch up the boards here. You hear the opening bell there for the equity market. If you flip up the boards, though, you can see what's happening with euro dollar. So overall, a stronger dollar. How much can that continue, except when it comes to the lira? The lira sort of really jumping higher here as the Turkish central bank surprised with a very strong rate hike. Also, yields are trading higher, particularly in the front end. You got the 2-year up by about 5 basis points. You can wonder if that's going to eventually put some pressure on tech, or if the NVIDIA story can really outweigh that. And commodities trading a little heavier, of course, because you got the stronger dollar. Again, are we overextended, though, going into Jackson Hole when it comes to the currency? So let's get to the main story. You got NVIDIA. That's going to really lead and dictate the market for the short term. Shares hitting a fresh record high on the back of those blowout results and stronger than expected outlook. The CEO saying a new computing era has begun. The race is on to adopt generative AI. Bloomberg's Ed Ludlow joining us now from San Francisco with more. Hey, Ed, what do you make?
Good morning, Alex. Well, NVIDIA's opened up more than 4%, not the same level of gains that we saw in after hours and pre-market, and just shy of $500 a share, now $490 a share. But if these gains hold, we will hit a fresh record on this stock. This was the third consecutive quarter where the sales forecasts given by NVIDIA came in way above analyst expectations. What they're saying for the fiscal third quarter is sales will be $16 billion US dollars, plus or minus 2%. I think most analysts were expecting around 12.5% figure. In the fiscal second quarter just gone, data center sales coming in above $10.3 billion. The average analyst estimate was $7.98 billion. The growth is coming from the United States when it comes to data center. HGX, which is largely server designs, including H100 and A100, are doing well there, but it was interesting to note that at this time, China still accounts for 20 to 25% of data center revenues, which is within NVIDIA's historic range. What is happening? Well, you outlined it. Jensen Huang talked endlessly, frankly, about the shift to accelerated computing and the response to generative AI. And several analysts had a stab at saying, can you quantify that for us? How confident are you that this will continue indefinitely? The response was they have visibility on demand into next year. Supply is improving. Even if US export restrictions on technology to China in the first instance are adjusted, there won't be an immediate impact. But long term, what they said is if there is a long-term restriction on technology exports to China, it will be, quote, a lost opportunity for US chip makers in what is, frankly, the world's most important electronics market.
Ed, good stuff. Thank you very much, Ed Ludlow, joining us. Let's turn to some other movers here in the retail sector. It's really confusing. Guess topping the earnings estimates and boosting its full-year outlook. The CEO quote saying our strong performance gives us confidence to deliver in the second half of the year. We're committed to managing our capital efficiently and expect to generate strong cash flows. Bloomberg's Abigail Doodle joins us now with more. I got to say, I did not expect this from Guess, and Dollar Tree not doing as well.
It's interesting. Such a mixed bag, no pun intended, for retail this quarter. It's hard to make heads or tails of the broader trends because we have companies that are doing really well, like Guess, and I agree with you. I would not have guessed that this at all. Again, no pun intended, given the fact that the stock was into today down more than 11% on sort of lackluster performance. But they put up basically a blowout quarter, strong right across the board. Sales, gross margin, and earnings all came ahead of consensus. Earnings beating by 82%. And it's not a tiny number either, Alex. Up 72 cents per share in adjusted earnings. And again, Asia strength, licensing for its European units, and at least some analysts, Jefferies in particular, thinks that the Asia strength could go ahead. I will note one thing though, Alex, there is a 26% bearish short interest on this stock, so some of this move today, it could be a short squeeze.
Okay, fair enough. Really good context with that. Abigail, thank you very much, although their commentary was still pretty good. All right, switching gears to the materials sector, we're following U.S. Steel. The stock is falling for a second day as another potential buyer backs away. So the CEO is saying that Esmark respects the position of the United Steel Steel workers and maintains a solid relationship with the organization and the leadership. That's, of course, from one of the bidders coming in for U.S. Steel is now walking away. Isabel Lee joins us with more. Isabel?
Hi, Alex. This is really an interesting story because Esmark is indeed not pursuing a takeover of U.S. Steel. The reason? To respect the rival bid of Cleveland-Cliffs. So Cliffs offered a takeover of around $7 billion, which U.S. Steel rejected. U.S. shares are now down by slightly 1%. It paired earlier losses. On Wednesday, it closed 2.2%, which is lower than the 35 per share proposal of Cliffs and Esmark. So the drama began on August 13 when U.S. Steel revealed it was reviewing proposals. And then hours later, we had Cliffs disclosing a takeover, and a day later, we have Esmark saying it will announce an all-cash proposal. But as we know, both those aren't panning out. And what's interesting here is Cliffs has the backing of a powerful labor union, and this labor union represents many of the workers at U.S. Steel. And now we know that based on a contract, the seal of approval of the labor is important and vital for the eventual suitor of U.S. Steel. Shares are now trading around, let's see, 1.5% lower, but year to date, it's up around 23%, Alex.
Isabel, thanks a lot. Isabel Lee joining us there. And finally got Boeing reporting an issue affecting its 737 MAX jet, raising concerns about its delivery target. I feel like we've heard this story before. The company writing, quote, during factory inspections, we identified fastener holes that didn't conform to our specifications in the aft pressure bulkhead on certain 737 airplanes. Bloomberg's Simone Foxman joins us now with more. Simone?
Yeah, another story we've heard before is problems with Boeing's largest supplier, Spirit AeroSystems, and that apparently where these issues are coming from. This adds to challenges for Boeing in trying to get back to its 38 jets per month pre-COVID level target that it wants to produce. It's been trying to ramp up 737 production to that. JP Morgan and Jefferies analysts both believe that it will take the company a bit longer to reach this pace. You know, the good news is the FAA says this is not a safety hazard, but this is really offsetting some positive news that we also heard after hours yesterday, that Qantas was ordering 12 Boeing 787 Dreamliners. That's doubling the number that it has. A report by Air Current, though, saying that this could potentially affect hundreds of misplaced holes, duplicate holes. So we'll try and get more information on exactly how long it will take for the company to address this problem, but shares now down 3.5%.
Simone, thanks a lot. Simone Foxman joining us there. Let's turn back to the stock of the day, and that's NVIDIA. So shares did hit a record high after earnings, but as Ed was pointing out, we're kind of rolling over here from that high. Dan Ives over at Wedbush writing, quote, NVIDIA's guidance and commentary was a drop the mic levels. This AI demand story is as real as any tech trend we've seen in the last 30 years, only comparable to the internet in 1995 and Apple's iPhone launch in 2007. Dan Ives of Wedbush joins us now with more. Dan, first, let's just go to the price action today. What does it tell you if it's sort of a buy the pre, sell the post? I mean, if we don't hold on to these record high levels, does that tell you anything about the short-term direction of the stock?
Oh, yeah, I just think this is knee-jerk. I mean, this is just the start, the appetizer in terms of where I think the stock's going. I mean, this was a historic guidance that we saw from the godfather of AI, Jensen, NVIDIA. And I think it just shows this tidal wave of spending is not even in the first inning, it's in the dugout.
I hear you. And my joke in the morning meeting today, I was like, Dan Ives is bullish on tech? Because you're always really bullish on certain tech names, right, Dan? And I'm wondering, how do we know this is just not a cyclical part of the tech industry? It's just a different kind of cyclicality. How do we know that?
Yeah, it's a great question. I can just tell you, in the last 30 years, we've never, not even within miles, have seen guidance raises of this level for a company the size of NVIDIA. And I think what that just shows, it's $1 trillion of spending coming around the corner. And we think it's the biggest transformational tech theme since internet 1995, maybe you could say 2007 iPhone. And now it's the second, third, fourth derivatives of AI. The front lines in NVIDIA, that's the godfather.
I hear you, but how do we know that it's going to be a continuous kind of build out? It's not a lot of like upfront spend, and then maybe we have some recurring revenue, but it's not going to be continuous and upgraded. How do we don't really know that though?
Yeah, and that's how we've spent the last, call it 9 months on the road, in terms of trying to figure out around the world where these budgets are going. We think going into next year, it could be 8 to 10% of budgets AI, from less than 1% today.
Wow.
And that's why as a tech team at Wedbush, We've just been pounding the table across semis, across chips, across internet. And because I think it's really the start of a new tech bull market. I think the bears, they came out of hibernation mode, those beaten down bears last few weeks. I think now they go back into those caves.
What did you make of the buyback? So typically when a large tech company does a large buyback, the conversation is, ooh, they see no other investment opportunity. What do you think of that?
I think they're just in a position of strength. I mean, they're generating more cash in some countries over the coming years. This was a smart move. Strategically, I think from a board perspective on the buyback side, they still could do M&A as well. But I think it's something investors wanted to see. And you just go take a step back. I mean, this is probably more pressure than I've seen on any earnings call in the last 15, 20 years. And they delivered home run fashion.
All right, Dan, if I haven't bought NVIDIA yet, do I need to wait or do I need to chase?
I mean, I think this is an easy buy today. I mean, that's sort of our view. I mean, you could be looking at name 1.5, 2 trillion in terms of where it goes. But derivative plays, for those that maybe you feel like they miss it, the second, third, fourth derivatives, names like MongoDB, Palantir, Microsoft, Google, among others, AMD and what Lisa Su are doing. I mean, this is going to be, I think, the next 3 to 5 years, something unlike we have ever seen in tech.
Dan, love it. Thanks a lot. Really appreciate it. Also like that shirt. Dan Ives over at Wedbush. Thank you very much. All right, let's continue the conversation now. We got Clear Harbor's Aaron Kennan. He joins us. Hey, Aaron, if you haven't bought NVIDIA, if you haven't bought into the AI trade, are you chasing it today?
Well, I think it's a longer-term trend, as Dan outlined, that has really commenced, over the last many years, and it's just accelerating with this generative AI movement, and NVIDIA is at the epicenter of it. And so we have exposure directly and indirectly here at Clear Harbor to the AI trends. And as Dan suggested, it's not just an NVIDIA story. It's a software story. It's a hardware story. It's about ultimately increasing productivity at the work level, and it has repercussions at a macroeconomic level around things like GDP. So we're certainly very focused on it.
What is the risk to it? So if you were in NVIDIA, or if you need to chase it, or it has such a pivotal moment in the tech industry, where's the risk and how do you manage that?
Well, I think NVIDIA is cheaper today on a multiple of future estimated earnings than it was even a year ago, even though the stock price has rallied significantly. With that said, I'm not beating the drum on NVIDIA per se, but I'm just making the argument that we have to keep our eye on the earnings side and the expected earnings side of this trend. And certainly, if you look at the forward multiple of the S&P 500, with estimated earnings this year at $222 for the S&P, that's over 20 times. One could argue that the market certainly is not attractively priced right now, but one could also argue that we're overweight things within the growthier parts of the economy within the S&P like we haven't been for many years or perhaps forever, and so that higher multiple can be somewhat justified.
Do you think that it can reignite animal spirits in the equity market? As in, if the window for a sell-off in stocks is closing, do you have to play catch-up? Like NVIDIA is supporting S&P enough that you have to then play catch-up to that?
Well, Alex, I think if you look at just year-to-date, the broad S&P 500 equal-weighted is only up just over 5% on a year-to-date basis, and the S&P is up 17%, with the NASDAQ up, 31% maybe as of the open this morning. And so the rally has been led not just by NVIDIA, but by large mega cap companies that are proving that they, even as they approach 500 billion market cap, 1 trillion market cap in the case of NVIDIA, that they can continue to grow. We are cautioned by the reality, though, that the broad market has not really rallied significantly this year. The Dow's up mid-single digits. As they say, if you look at the value line index, it's up about 5%. That's very lackluster when you then pivot and look at the growthier names through the NASDAQ index prism.
Yeah, fair enough. Sort of a dose of reality to that hype. We're going to get more into that. Aaron Kennan sticking with us. So coming up, retailers under pressure as consumers start to feel inflation pains.
there are cracks of the consumer. Yes, the consumer remains strong overall, but there are pockets of weakness. We do expect consumer spending to start to slow.
Dollar Tree, the latest victim of profit pressures and theft. That conversation up next. This is Bloomberg.
I do ask myself if, this story of resilience in the U.S. economy is really dependent on the continued resilience and health of the consumer. We are seeing signs that consumers are coming under pressure. You're beginning to see the consumer bend more so than break, but obviously that does suggest tougher times ahead for the overall U.S. economy.
As I keep saying, I am on a budget. That was JP Morgan's David Lebovitz on the state of the consumer. Retail earnings definitely taking a hit. The latest victim is Dollar Tree, missing analyst estimates. The CFO quote writing, factors like sales mix and elevated shrink continue to pressure margins. Meanwhile, Nordstrom's and Gap reporting earnings after the closing bell. Simone Foxman is back with us. I thought Dollar Tree was kind of where you go when things are bad, which was confusing. Simone, what did you make the numbers so far?
Yeah, and to that point, the CEO is saying that 5 million new consumers, with 2.6 million of those customers having a household income over $125,000. So that suggests that there is some trade down, some move to Dollar Tree, but it's not offsetting the decline in profit margins. And that's really the concern here. Dollar Tree talking about how how consumers are increasingly buying their consumables, their food products from them, but those are low margin products. And then, of course, you have this mention of shrink. We heard it from Dick's this quarter. We thought that was the one everyone was really going to focus on, but now we're also hearing it from Dollar Tree.
Yeah, Simone, thanks a lot. Appreciate it. So all eyes are going to be on Chair Powell speaking at Jackson Hole on Friday. Clear Harbor's Aaron Kennan writing, quote, "The Fed is poised to pause in September and continue to assess the balance of disinflationary pressures, employment, and stronger than anticipated growth. This will be the message out of the Fed in Jackson Hole." Aaron is still with us. All right, Aaron, help me tie in the PMIs over the last 2 days, the numbers from retailers, into how that's going to feed through to what Jay Powell says tomorrow.
Yeah, I think you're seeing the average consumer feeling a bit of a incremental tightening when you look at their own personal balance sheet. You look at the savings rate, excess cash, it's trending significantly lower. It hasn't been where it is for quite some time now, well, into, sort of the possibility of a recessionary period. You look at, sort of the revolving lines of credit on their credit cards, they've been extended. You look at auto delinquencies are up. And jobless claims, well, this morning were sort of roughly as expected, but, have been elevated recently. And I think, the big question for, the market is when will employment really crack so that the consumer really feels the pinch. And we know monetary policy, Alex, works with a lag. If you look at the mortgage market, for example, 61% of mortgages have an interest rate of 4% or less, and 81% have a rate of 5% or less. And the average mortgage, if you were to buy a home today, is about 7.5% on a 30-year fixed rate. So if the rate structure remains the same, even with unemployment where it is today, there's going to be, further tightening on the consumer side.
Aaron, taking into account the PMIs, the services in particular from yesterday, clearly the gap between manufacturing and services is starting to close, but services really haven't gone into contraction territory yet. Do you think that that's bleeding through into the job market yet?
Well, you're right. I mean, we saw 43.7 on the manufacturing side, and just barely expansionary now on the services side. Europe, a different story, full contraction. But back in the U.S., I mean, certainly we're keeping a significant eye on the employment picture, and I'm sure the Fed is as well. But the Fed has done a lot of tightening, Alex, and it's not just in raising Fed funds, and it's not just in what we see in the rate structure of the United States. Quantitative tightening, reducing their balance sheet, we think is adding probably a good 150 basis points when you actually think about the true Fed funds rate. So it's probably closer to like 7% here. And they've gone a long way. Headline inflation went from 9% back in June of 2022 to 3.2% today, and core is down 200 basis points over the same period. So, wait and see, monitor data seems to be the most prudent approach for the Fed here going into Jackson Hole.
Real quick, Aaron, what's your favorite hedge right now as we head into all this uncertainty?
Well, I think on the equity side, if you think that we're going to see a slowdown and that disinflationary trends will continue, utilities do look interesting because they're so rate sensitive. But I think the traditional sort of longer duration part of the Treasury market, I don't mean the 30-year, but closer to the 10-year, it does make some sense here. If growth really does disappoint to the downside, Treasury should rally. It'll give Fed relief, and maybe we even see them cutting next year. And so I think that certainly, when you think about sort of an equity fixed income balance, I think that sort of hedging component of a high-grade interest rate product makes sense here.
Aaron, thanks a lot. We really appreciate your insight. Thank you, Aaron Kennan, joining us there. All right, coming up, we got the market moving events you need to be watching. That's next in our Trading Diary. This is Bloomberg. This is Bloomberg's The Open. I'm Alex Steele, in for Jonathan Farrow. The Nasdaq 100 losing a little bit of steam here, giving up some earlier gains. It's time now for the trading diary, what you need to be watching through the rest of the week. You got Nordstrom and Gap earnings coming out after the closing bell. It's been a bit mixed bag for retail earnings. Plus, Chair Jay Powell will be speaking from Jackson Hole on Friday. It's the main event at 10 a.m. Eastern. All right, let's go to next week. We get the JOLTS data on Tuesday. We also get U.S. core PCE and GDP coming on Wednesday, heavy lift day. And finally, rounding out the week with U.S. payrolls report next Friday with like the 3 people in the world who'll be trading on that day, on Labor Day weekend. This is the Countdown to the Open. Thanks for joining me. Jonathan Farrow is returning tomorrow for a special edition of Surveillance from Jackson Hole. That starts at 8 a.m. Eastern time, so don't miss that. In the markets, you're looking at S&P really trying to hold on to some gains. The Nasdaq kind of giving up a lot of its oomph, and as we head into the trading day, you have safeties, real estate, utilities, the top sectors within the S&P. You got energy and consumer discretionary on the downside. A little bit of a push and pull. This is Bloomberg.
Got that all day yesterday.
From the financial centers of the world, this is Bloomberg Markets with Alex Steele and Guy Johnson.
It is 30 minutes into the U.S. trading day, Thursday, August 24th. Here are the top market stories that we're following for you at this hour. NVIDIA rides high. The stock hits another record then fades just a little bit. The Nasdaq 100 barely holding on to its earlier gains. Powell versus Lagarde. Jackson Hole kicks off today. Who has the harder job? We're going to speak to Bank of Portugal Governor Mario Centeno. And debate spin. The GOP contenders go after Bidenomics at the first debate. We're going to have an interview with Republican presidential candidate, former Ambassador Nikki Haley. From New York, I'm Alex Steele with my co-host in London, Guy Johnson. Welcome to Bloomberg Markets. Bidenomics is a hard word to read, by the way. But Guy, I'm looking at NVIDIA. I find this really interesting. Yep. Why are we fading a little bit here?
We are in the middle of the Subway sandwich. We are the filling, we are the cheese, we are the lettuce, we are the tomato in the Subway sandwich right now. We'll talk about Subway as well a little bit later on. We've had NVIDIA, and now we're looking forward to Powell. So there's a danger that maybe rates get pushed higher into Powell. So I think that's a factor that we're watching here today. NVIDIA clearly blew past expectations, but how much higher can this stock really go? It's interesting that European tech stocks are not rising that much today. The sense maybe over here is that valuations are already looking pretty toppy. I was talking to Dan Ives at Wedbush just about this point. Like, how much higher can we push? If it's a really transformative thing, then over 10, 20 years, like, sky's the limit kind of idea. But at some point, I have to wonder, is there cyclicality to this story that we just don't know yet? And also, if you're buying back $25 billion worth of stock, like, why are you doing that? Like, why isn't there a better investment opportunity? Absolutely, and there is this kind of whole idea as well that they're still dependent as well. There's a PC market out there. There are other markets that still they are dependent on, but clearly the AI story is absolutely front and center. So we've dealt with that that side of the Subway. Now we need to talk about the other side of the Subway sandwich, and that is what is going to be happening at Jackson Hole. I'm sure they won't be eating Subway sandwiches. I literally didn't know where you were going here with this. I was like, what is happening? Where are we going? But now I'm with you. We are the lettuce. You are tucked between the lettuce and the tomato right now of that Subway sandwich. Subway up for sale. We're about to see that deal getting done. That's the reason why I'm referencing it. But let me continue. The buzz at Jackson Hole, what is it going to be? Is it going to be Lagarde versus Powell, as you say? Are people going to be talking about the AI story? Are they going to be talking about the fact that this economy is absolutely on fire right now? I think the claims data is quite interesting today, telling maybe some different stories. But recently, the data are certainly suggesting that this is an economy that continues to do very well. That's the US economy. European markets, European economy, not so good. So joining us to kick this all around, Kriti Gupta, joining us in New York. Odd Lots co-host Joe Weisenthal joining us from the epic background that we see behind him with Jackson Hole. Joe, let me start with you. Look, what are they talking about? What is the buzz? How many times are you going to hear the words R-star over the next few days? Higher for longer. What are the buzz phrases that everybody's referencing?
You nailed it. I don't even need to be here. You do. You nailed it right there. I do think that is going to be the big theme. I mean, I think a lot of people are clearly taken aback by the persistent strength of the U.S. economy, anxiety that inflation is going to pick up, surprised that this rapid pace of tightening that we've seen so far hasn't really, it seems, produced more weakness in the labor market, it seems. So, you see rates shooting higher. You see yields on the 2-year becoming less and less inverted, especially over the last few weeks. I kind of think it's one of these things where had this event been taken place like a month ago, there would be like, oh, things are looking good, soft landing, we may have done it. And now it feels like maybe there's a little more anxiety creeping in that there is a bit more work to do. And so as you said, what is the neutral rate? Is it a lot higher than we thought? And will the rates be much higher for longer? Totally. And it's much more complicated, particularly after those PMIs yesterday. Kriti, for the market, what's the buzz on Jackson Hole for the market? Like, do you need to hedge differently today into tomorrow than you would have, as Joe was talking about, a month ago?
Honestly, I don't really think so. And I think when we're talking about the market, I don't think you can really put stocks into that category because there really is a bond repricing story, specifically after we got those initial jobless claims today. Look, 230,000, the number came in. You are still seeing the same narrative that we saw a month ago, 2 months ago, which is that, yes, the economy is slowing, but perhaps not as fast. That even if we're talking about recession, it might not happen for a year or even two. That seems to be the narrative baked into the market. I think the real difference here, though, is the divergences you're going to start seeing between the United States and Europe. And I think that's where the conversation at Jackson Hole really matters, which is no longer are all the major economies in the world on the same page.
But yeah, let's go back to Joe and talk a little bit more about that. Joe, is there a sense, do you think we will get a clear sense of why the United States is exceptional right now? Is it because the economy is just that much better? Is it because federal spending is boosting things there where we're not getting that same boost elsewhere? Is it because of AI and the excitement around that? Why is the US different?
I'm sure the central bankers would love it for it just be AI and that we're on the verge of some huge productivity boom that is going to solve all the problems with inflation, et cetera. But I suspect it's more of some of the former things. And so, yes, you mentioned that the U.S. has this big, ongoing, persistent fiscal support. And there's bills that are coming, domestic investment, the likes of which we're not seeing elsewhere. I think also a lot of people are simply paying attention to the fact that maybe monetary policy in the U.S. doesn't have the same teeth as elsewhere, in part because there's so much fixed rate debt here. And if you ask anyone, what is the channel via which we know monetary policy works through, they'll probably say, well, okay, the one thing we know it does is it works through the housing market, where so many people have 30-rate fixed-year mortgages. You look at some other countries, Canada, Australia, where there's much more floating rate debt, you can see that perhaps monetary policy sort of like takes effect much quicker in those economies.
Yeah, Joe, I have a 2.75%, right?
Do you really? How can you just brag? You just drop that in conversation.
No, she does. I literally do.
Absolutely 2.75%.
And you can't even be mad at me because it's so awesome. So wow, that was so obnoxious. But yes, that's not true.
People can be pretty mad at you.
Joe, hey,
people
real
are
quick.
allowed to be mad.
Fine. Okay, be a little mad. Joe, are people talking about NVIDIA and the market sentiment before we go back to Kriti here on the markets?
I will be totally honest. I haven't heard any NVIDIA talk. Yeah, I'm sure there are plenty of people looking at their phones and looking at the line goes up. But just in full disclosure, I haven't yet, other than just sort of me looking at my phone and with my jaw dropped, haven't heard much NVIDIA talk.
Well, there you go.
Well, Kriti, but that I think is actually a really interesting point, because a conversation that has been percolating is that NVIDIA was leading rate vol, right? And rather than the other way around. And I wonder if we just kind of overdid that a little bit. What do you think?
Well, I think it's two different stories. We'll start with the stock story here, because if you look at the NASDAQ, it is actually pairing a lot of the opening gains that it had, which was driven by those NVIDIA moves, by the way, whereas NVIDIA shares higher by 3.5% at the moment. But I think it comes back to what Joe was just talking about, which was there was this narrative for a second that maybe AI could solve all the productivity, all the production problems that are in the labor market. And isn't that the theme of the academic symposium at Jackson Hole right now, which is kind of the structural issues in the economy? Well, if we're still talking about the labor market, if we're still talking about labor being kind of the metric of success for Jay Powell, then I think AI absolutely should be a part of the conversation. I just don't think those dots are being connected yet, because it is still a very long-term prospect. So even though the central bankers may not be talking about NVIDIA, I think the market absolutely is, because one of the reasons, or one of the bull cases for the equity market is, oh, hey, look, NVIDIA did deliver on these pretty big dreams, and maybe the others will too.
Yeah, but it's this long duration story, and when does that happen? These are very long-term plays, and how you price them, I guess, is the real anomaly here. It was clear in 2000, it was clear in 1999 that the internet was going to change the world, right? It was clear in 2000 that not all of the companies that we thought were going to change the world were going to change the world. Are we at that moment, Kriti? And that's the thing I think everybody's got to try and figure out.
It's interesting to say that everyone knew that the internet would change the world. Now, admittedly, I don't remember this conversation, but not everyone did. Not everyone put their money where their mouth was, if I remember correctly. And then you missed out on this massive kind of jump in the stock market, which ended up kind of coming true later, yes, in the span of, say, the decade that followed. But it's a move that I would argue you are still seeing, and one that I think is kind of matched the stock market. Look, you have to put this in the context of the 2022 carnage, the bond market story you're talking about, Guy. A lot of it was priced last year.
Hey, Joe, do you think that that Powell wishes he could have spoken before the PMIs came out yesterday? Like, did that really weigh on some of the conversation?
It's so interesting because, like, this economy is so hard to read, right?
Yeah.
I could tell you a story about, like, initial claims just fell again, unemployment at 3.5%, like the U.S. consumer improving mood, booming, and then you could look at other data and say, like, look, there's actually signs of delinquencies creeping up, and Macy's is talking about the credit quality of some of its customers, and other signs of weakness, particularly in the manufacturing. And even there, it's weird because, at the same time we're talking about about some of the weak regional feds and PMIs and so forth. We also know there's a lot of construction. So like, I don't really envy anyone whose job is to like look at this economy and say like, oh, I know that this is overheating or recession risk. Like, you could tell any story. I think it's been like that for the last year even.
Yeah.
That there are so many stories you could compellingly tell about the trajectory of this economy.
I totally agree. And like the chart of XX savings only takes you so far. Joe, I'm shocked you're in a suit. I got to be honest, having known you for so long. Are you in cowboy boots or like in dress shoes?
I'm in dress. There was a scramble yesterday morning at my house where I was looking for my cowboy boots, and I found one of my alligator skin boots, and I couldn't find the other, and I was so heartbroken by that. I was like, oh, I'm going to wear that, and I couldn't find the other one.
Okay, because just so you guys know, like his outfit uniform here, like jeans and cowboy boots, like that's his jam. That's kind of crazy. Joe, thanks a lot. It was good to see you. Thank you for joining us. A co-host, Odd Lots, Joe Weisenthal, and Bloomberg's Kriti Gupta, who we'd love to say goodbye to, because Kriti is going to your side of the pond, Guy. You can catch her.
She is, yeah.
Where are we catching you now?
6 a.m. in London.
6 a.m.
7 a.m. Paris and Frankfurt. But yeah, Daybreak Europe starting in a couple of weeks, so tune in.
Lucky, guys, very lucky. We will miss you here, but you'll be in good hands. All right, coming up, more on our question of the day. What is the buzz in Jackson Hole? Mira Pandit of JP Morgan Asset Management joins us next. This is Bloomberg.
When you look at
NVIDIA,
What we're seeing in NVIDIA is obviously very good news.
there's really nothing bad about that report.
they just completely surprised the market.
It's kind of a nice relief for a lot of investors.
Affecting the behavior of investors on a more of a risk-on mood from what we've seen in the past few weeks.
It's a very exciting story, a very exciting stock.
We're particularly impressed by the strength in data center.
They have a very dominant position in the data center.
Could the stock double? Of course it could.
We'd like to see another 15% move in the price.
The macro landscape is very favorable.
What NVIDIA is being very quite clear on is the demand will last into the foreseeable future.
I think you're going to see definitely a spillover effect.
Optimism in the AI theme again.
This wave around AI is not going to slow.
Those are some of our guests on Bloomberg Television reacting to NVIDIA results. Now, AI impact on productivity is obviously something everyone's watching. It's also a sentiment indicator as well, which brings us to the question of the day, what's the buzz in Jackson Hole? Now, Joe was saying no one was talking about AI and NVIDIA. Okay, fine. Maybe tomorrow they will. Who knows? But Mira Pandit, JP Morgan Global Market Strategist, is with me here on set. On a Wall Street perspective, Mira, what is the buzz about Jackson Hole from where you sit?
I wouldn't disagree with some of the things that Joe pointed out in terms of where does R-star go from here? Where does the Fed go for the rest of the year? And wow, look at the whopping numbers we're getting in the U.S. economy from a growth perspective when we look at the incoming data. So let's start where we are today and where we're looking at for the next couple of months. I think that when you look back at the July FOMC meeting, perhaps if I would have pulled one headline out of the press conference, it was that the committee is willing to be patient and resolute. Well, what does that mean? If patience implies some sort of monetary policy acts with long and variable lags, let's be patient, versus resolute, core inflation's not low enough, we need to keep hiking. And I think you're going to continue to hear about a committee divided as we think about the incoming data. Now, a lot of the incoming data would support a pause at this point if we look at everything that the Fed has pointed to thus far, whether it's ECI wages, job openings, non-farm payrolls, core inflation. We're seeing some progress there. But then you look at the Atlanta Fed GDP tracker at 5.8%. While it probably won't come in that high, we're looking at above trend growth. So I think that stymies some of the plans of the committee members. And then from a longer term perspective, where is that neutral rate given this type of inflation environment we're in the long run?
Mira, I haven't heard you say the word cuts. Is that within the vocabulary at the moment? Should that be in the vocabulary at the moment? When should it be in the vocabulary? Because the market thinks it comes next year. What if it doesn't? How mispriced are we if it doesn't?
Well, the good news about where the market is priced now, it is very much in line with how the Fed is seeing rates progress from here. In fact, last year, the difference between Fed expectations on rates and market expectations on rates, there was a huge gulf. Whereas this year, they're quite closely aligned, which is a good thing from the markets when we think about surprises. And I don't think that cuts should be out of our vocabulary. Even if we're higher for longer, we're not higher forever. And I think that there's three scenarios in which you could see cuts play out next year, probably in the back half of the year. Either one, the obvious one, we see a recession, the Fed cuts quickly. Two, we don't see a recession, but the Fed still cuts quickly, because if they don't, businesses, consumers that are making decisions on capital spending might push out their decisions a bit further, and that wait and see slows the economy. And then the third situation is what the Fed lays out in their dot plot. No recession, but they cut very slowly just to maintain a reasonable level of real rates. Very inconsistent with what we've seen in history. Usually the Fed takes the stairs up and takes the elevator down on cuts. But this time they've clearly taken the elevator up on hikes and potentially could take the stairs down on cuts.
Not higher forever. I don't think I've heard that one yet, so I'm not keep that in the back of my mind. So with that view, where is the biggest misprice in the short term?
Probably for me, yields. Yeah. Because if you look at where...
Too high?
Too high. Okay. Because essentially what yields are pricing in right now is above trend growth, a sustained level of above trend growth. And I think that's pretty unlikely when we think about slowing profits, slowing credit growth, rates at a high level. So right now when you see 4.2, even in the last couple of days, 4.3% on the 10-year, that really seems to be pricing in an economy that could be sustained for a quarter, but probably not multiple quarters. So I think the next move in yields is probably coming down a bit lower, especially to reflect eventually if we do start seeing some form of cuts next year.
So do you buy duration now then?
Absolutely. I mean, if we think about how cheap bonds have become even just over the course of the last month or two, it is a screaming buy at this point when we think about not only the valuations, but the yields that you're locking in. And again, the fact that markets and yields right now are priced for very strong growth, which probably won't be realized over the longer term. So maybe the next direction of travel, we see a little bit of an upward move in yields. We continue to see some of the volatility we've been seeing. But over the course of the next couple of months, I do think even in the absence of a genuine economic slowdown, even if we just get back to trend growth, you're going to see yields cool a bit.
So, Guy, this is where I feel like all the stories kind of intersect, because on the longer term, if you have the kind of CapEx investment cycle that NVIDIA is presenting, you have Biden economics, which even if you hate it, is not going to go anywhere, or at least even if it's reduced, some part of it will still be there and be around. And then you still have consumer balance sheets. And I wonder if that just leads to structurally higher yields, not 5%, but structurally higher yields for longer.
Yeah, the problem with all of this is that if the first half of the year taught us anything, is that narratives change really quickly. And when layoffs happen, they're going to happen really fast. So Mira, what's the degree of certainty? How do you think about this? Are you certain? You kind of presented three different kind of potential scenarios. What is to say there aren't 5 different scenarios? What is to say there aren't 10 different scenarios? If I've learned anything thus far this year, and I think every hedge fund manager and every portfolio manager has learned the same lesson, narratives don't stick around for long. You're getting whipped around really quickly. Are we going into a more evenly paced, evenly managed, sort of easier to figure out environment? Because you make it sound pretty straightforward. By duration, yields are going to come down a little bit. It's going to be pretty straightforward. Is it really?
Well, I think that you have to make your investment decisions not based on the macro, because I would totally agree with you. This is a low conviction environment when it comes to the macro. It changes on a dime. And the way what we're thinking about investing both in stocks and bonds is really about the fundamentals, not the way the macro winds are blowing. So for example, when I think about bonds, I don't think about liking bonds because I think the world is going to blow up or growth is going to slow dramatically. But I think about it on a price basis, on the fact that a lot of companies have pushed out their debt and termed out their debt. Balance sheets are looking pretty strong. And when you're getting bonds at a pretty good price and a pretty good income, that makes a lot of sense for a portfolio. And additionally, on the equity side, yes, valuations overall are a little bit stretched. There are pockets of the market that feel a little bit frothy. But overall, if you look underneath the surface and you find some relative valuation advantages, there's some benefits there, and you really focus on profits and which areas can do well over a multi-year time horizon, that's how I'd anchor investment decisions, more on the micro, less on the macro. Yeah.
Alex?
It's you.
You can. No, is it me? Okay, I can go. I thought I asked that question.
But I felt like I should, and then I was like, no, you're doing it. You do it. You do it.
Okay, I'll do it. Mira, nice to see you. We're fighting over how to say thank you to you. That's got to be a great sign. Mira Pandit, Global Market Strategist, JP Morgan Asset Management. Thank you very much indeed. Still ahead, we're going to talk more about NVIDIA. Shares hitting a record high. The AI-fueled chip demand driving bumper results. The question is, are those results commensurate with the current valuation? Yeah, the stock's up 6.5% on over 2 days. Can it continue to climb is the big question from here. This is Bloomberg.
It's 23 past 7 on the West Coast. Want to get right to the startup where we cover the top tech stories from the Bay Area and beyond. Joining us now, Bloomberg Technology co-host Ed Ludlow. Ed, what's happening with NVIDIA here?
Yeah, we kind of lost, well, so I was going to say lost some steam. It's kind of completely deflated. But even at a gain of 3.4%, shares just below $490 a share, we're on track to close at a fresh record. And we spent all week talking about all the hype and expectation for this earnings. Third consecutive quarter where the guidance came in way above analyst expectations. And all we need to know is the AI story, at least for NVIDIA, is intact. The demand is still there to buy GPUs for data centers that power accelerated computing and generative AI.
So what happens now, Ed? This is a genuine question. Does it just go from strength to strength? Are others catching up? How does this work? Can this be maintained? Even if the stock stayed where it is, it would be at an incredibly elevated level. Can it continue to climb? How do they do this next time?
Well, I guess one piece of news I'd point out is the $25 billion of share buyback that they authorized. That tells you kind of one or two things, right? One, they either think the stock is cheap and undervalued, or two, they've got nothing else to spend their cash on. You know, we can debate that. Look, NVIDIA has the most powerful GPU, right? Different to a CPU, a GPU can run lots of data processes in parallel rather than focus on one big task. But it's best used for large language models that have many billions of parameters. You know, we're talking GPT 3.5, what Hugging Face is doing, what Anthropic's doing. But the future of AI is much more democratized. You know, people will use large language models that don't have billions of parameters. They have hundreds of millions, and those don't require the same compute. NVIDIA's response to that is that that means a much bigger addressable market. There's more upside. It will just keep going for them. But I think Intel and AMD would have something to say about that as well, because they'll say, well, hold on. We also offer relevant GPUs and indeed CPUs that can power lower power LLMs. So either way, I think what we agree here, and you know, the message that Jensen Huang said on the call is we're just at the beginning of what is a really expansive phase of investment into accelerated computing and you know, the compute needed for generative AI.
You have plenty to talk about on the show later on. I look forward to watching Ed. There was a lot. There's a lot of kind of GPU, LLs, whatever that was, CPUs. There's things going on there. Ed and Caroline will explain. This is Bloomberg.
Welcome to Bloomberg Television. I'm Anne Marie Horder, and alongside Joe Matthew, and we are pleased to have joining us now the former South Carolina governor and UN ambassador Nikki Haley. Ambassador, thank you so much for your time this morning. The Wall Street Journal editorial board is leading with this. Most GOP voters who aren't in Iowa or New Hampshire are only getting to know these candidates, and Ms. Haley may have been the most pleasant surprise. How are you feeling this morning? What have your overnight fundraising numbers looked like?
Well, there's more where that came from, so the Wall Street Journal needs to get ready. But, you know, it's great when you can be on a debate stage and allow everybody to see their options for who's going to lead the country going forward. I think it's a good time. This is the start of the debate season. We think we did really well. We're seeing that. We're getting support. It hasn't stopped since the debate was over last night all the way into this morning, and we welcome it. I hope your viewers will go to NikkiHaley.com. But I think what's really important is we have to focus on the issues at hand. How do we get inflation down? Too many families can't afford groceries. They can't afford their rent. They can't afford gas. They can't afford child care. 50% of American families can't pay for diapers, and 1 in 6 American families can't pay their utility bill. And while everybody would love to say, oh, Biden did that to us, we have to remember our Republicans did that to us as well. And that's why I called out Tim Scott and Ron DeSantis and Mike Pence and Donald Trump for the, spending like drunken sailors and raising the debt limit. I think it's time that we start to really make sure we get our fiscal sanity in order.
Yeah, that was a big moment for you last night, calling out not only Democrats, but members of your own party on that debate stage. And here in Washington, Ambassador, as you pointed out specifically, the Trump administration added $8 trillion to our debt. So let's be specific today on Bloomberg. The third rail that nobody wants to touch is the entitlement, Social Security, Medicare. How would you manage the entitlements to try to start getting our arms around soaring debt?
Well, you've got multiple candidates on that stage that said they wouldn't touch entitlements, including Trump. And any candidate that says they're not going to touch entitlements means that they're basically going to go into office and then leave America bankrupt. Social Security is going to go bankrupt in 10 years. Medicare is going to go bankrupt in 8. So the way we deal with it is we don't touch anyone's retirement or anyone who's been promised in, but we go to people like my kids in their 20s when they're coming into the system, and we say the rules have changed. We change retirement age to reflect life expectancy. Instead of cost of living increases, we do it based on inflation. We limit the benefits on the wealthy, and we expand Medicare Advantage plans.
What's the right age there then, Ambassador?
Well, I think we have to do the numbers. We've got to figure out what it is. But what we do know is 65 is way too low, and we need to increase that. We need to do it according to life expectancy.
You raised your hand last night when asked if you would support the Republican nominee. Of course, if that ended up being someone else, I know you're running for president here. But if Donald Trump is responsible for adding $8 trillion to the national debt, how could you support him again for another administration?
Well, first of all, I don't think Donald Trump's going to win the nomination. I think I'm going to win the nomination. And secondly, I think that we have to focus on the fact that anybody is better than a President Kamala Harris. I mean, you look at the socialism creep that Biden and Harris have gotten us into, whether it's the CHIPS Act, whether it's the Inflation Reduction Act, whether you see all of these subsidies that they're green subsidies that they're doing. They're the ones that have left us into a situation where I don't think our kids are going to forgive us for it. And so any person on that stage is better than Kamala Harris, and I'm going to say that all day long, but I think the American people are smart. I don't think Donald Trump's going to be the winner of the primary. I think I'm going to be the winner of the primary, and I think that's why we need a new generational conservative leader, because we've got to leave the past and the negativity behind us, and we've got to start focusing on the real problems at hand and start getting things done.
When we look at the new generation, the most Googled individual today, Ambassador, is Vivek Ramaswamy. You took issue with foreign policy yesterday. This is an individual, #1 Googled in America, who wants to give Ukrainian land back to Russia, something that actually individuals in the Republican base agree with, kind of taking a playbook from the former president who has called what Putin has done in Ukraine genius and savvy. You chastised Mr. Ramaswamy yesterday, but you worked for the former president. Are both these men wrong when it comes to Russia's invasion of Ukraine?
Well, you know, President Trump used to have it right when it came to Russia and Ukraine. He reversed the Obama strategy, and he sent Javelin missiles to Ukraine, and I was proud to serve with him then. He's now backtracked now and is going into where he's weak in the knees on Russia again. You've got Vivek Ramaswamy, who basically wants to side with a murderer over a pro-America, freedom-loving country. That doesn't make sense. You've got Ramaswamy who wants to cut aid to Israel. He doesn't understand that it's not that America needs Israel. It's not that Israel needs America. America needs Israel. They're the front line of defense for Iran. He wants to feed Taiwan to China. He's missing all the points of you can't be so narcissistic to think America doesn't need allies. We do need allies. And when you have an ally, you take care of them. Everybody's talking about this funding to Ukraine. First of all, I think economic aid should come from the Europeans, but equipment, military ammunition, we should be sending that. And when we send it, let's keep in mind, it is less than 3.5% of our defense budget that has gone to Ukraine. If you look at the percentage of GDP, 11 European countries have paid more than the U.S. But making sure, we have to always know a win for Russia is a win for China, and we can't let that happen.
You're saying Trump did get it right at one point, but it was under the Trump administration that withheld millions of dollars, hundreds of millions to Ukraine that was appropriated by Congress. Did they not prepare Kyiv well enough for this onslaught?
Well, I think that, look, there was a problem with the fact that I think Trump had two sets of ammunitions that were supposed to go to military equipment and ammunitions that were supposed to go to Ukraine before Russia invaded, and Biden pulled it because he didn't want to upset Putin. This war could have been prevented. Biden was slow to the take. He didn't act strong enough, and that's what happened. And then you go and you add the Afghanistan debacle. I mean, the idea that we left Bagram Air Force Base in the middle of the night without telling our allies who stood shoulder to shoulder with us for decades because we asked them to be there. It was the green light Putin needed. It was the excitement that President Xi in China got. It's why Iran started building a bomb and North Korea started testing ballistic missiles. When they see weakness, that's when they smell blood in the water, and that's why we saw aggression. We need a strong American president who understands what it takes to keep Americans safe. And the way you do that is you make sure you defeat Russia when it comes to Ukraine, because that sends the biggest sign to China on not to invade Taiwan.
The Biden administration at the moment is sending billions of dollars to Ukraine. They've also, under their leadership, were able to help expand NATO. Do you not agree with that?
I absolutely agree with defending Ukraine, and I agree with the fact that we need to expand NATO. I mean, that's good to see, and I actually think that it should go further than that. I think that an invitation to NATO should go to Ukraine. They've proven that they're good military fighters, and let's keep in mind, Russia has never invaded a non-NATO country. They've invaded Georgia, they've invaded Ukraine, they've invaded Moldova. They don't ever invade a non-NATO country, so we need to make sure that we continue to expand NATO. And we also need to work with our other allies, India, Australia, Japan, South Korea, Israel. We need to start going to the Arab countries. We need more friends, not less.
I have to ask you about an important issue on the campaign trail, Ambassador, that loomed large over the midterm elections and will certainly be top of mind for voters, Democrats and Republicans, in this next election cycle, and that is abortion. It came up in the debate last night. You've suggested that there are no votes for a national abortion ban, or for that matter, a regulatory bill here in Washington. You made that point last night, but I know that your state of South Carolina has put in place a 6-week minimum. Mike Pence and some others in the Republican Party are suggesting a national 15-week. What is your minimum? What should be, in fact, the number of weeks for this country to coalesce around?
I am unapologetically pro-life, not because the Republican Party tells me to be, but because my husband was adopted and I had trouble having both of my children. So I'm surrounded by blessings. Having said that, I don't judge anyone for being pro-choice any more than I want them to judge me for being pro-life. We didn't need unelected justices deciding something this personal and this important. So I think it was right to send it back to the people to decide. If the people of South Carolina chose 6 weeks, they decided. I'm happy with that. Other states have chosen other things, but at least the people's voices are being heard. The debate that happened last night was whether there should be a federal law. And I think there is a place for a federal law. I think that most Americans, but we have to decide, in order to get a federal law, you have to win a majority of the House votes and you have to get 60 Senate votes. We haven't had 60 Senate votes on the pro-life side in over 100 years. So we need to come together on consensus. Where is the consensus? Let's agree that we should ban late-term abortions. Let's agree that we should encourage more adoptions and good quality adoptions. Let's agree that doctors and nurses who don't believe in abortion shouldn't have to perform them. Let's agree that contraception should be accessible. And let's agree that no state law should tell a woman who's had an abortion that she's going to jail or she's going to get the death penalty. Let's start there. We have to humanize this situation. I'm not going to be a part of demonizing this issue. It's personal for everyone, and we need to treat it with the respect that it deserves.
Ambassador, thank you for sharing some of your also personal experience with this. Pence says every candidate, though, should support a ban on abortion before 15 weeks as a minimum nationwide standard. What is your minimum?
First of all, why put women through this? Why put men through this in a way that they're going to hate each other and demonize each other? We don't have 60 Senate votes. So where is the consensus? We have to figure out
But the American people want to know from you, as a woman as well, where you would stand on this. A lot of candidates have come out and said they're either for 6 weeks, they're for 15 weeks. What is your number?
Well, first of all, I'm for whatever the states decide where they are, but I'm also going to tell you my job is I'm going to support or promote saving as many babies as possible and support as many moms as possible. Wherever those 60 Senate votes come down, we're going to do it. If you can't get 60 votes, you can't save babies. So it's going to require a lot of coming together and figuring out where people are, but we're not going to divide our country over this issue. We're going to bring our country together, and where we can get 60 votes, that's what we're going to do.
Can we have an honest conversation before we let you go, Ambassador, about Donald Trump? He chose not to attend the debate last night because of his commanding lead in the polls. It's difficult to discount the trajectory here. I know you don't think that he's going to be the nominee, but he's leading the field by anywhere between 20 and 40 points when you look at the poll. I remember the day you endorsed Marco Rubio in the 2016 campaign. You said, "I will not stop until we fight a man that chooses not to disavow the KKK," referring to Donald Trump. "That is not a part of our party. That is not who we are." With that said, your party seems to be in love with Donald Trump. What is your path to the nomination?
Well, look, I was proud to serve in Donald Trump's administration and push the foreign policy that we did that basically took the kick me sign off of our backs at the UN and had America respected again. And I support a lot of the policies that he supported. But I think that you have to look at the fact that 3/4 of Americans don't want to see a Trump-Biden replay. The majority of Americans, I mean, Trump is the most disliked politician in America, and the most disliked politician in America can't win a general election. So this was the kickoff to the debate season and to the election season. I think now people are paying attention. I think there's a big difference on people who support Trump and people who are going to vote for Trump. I think people know that we've got new issues, big issues, that we need solutions. We can't keep looking to the past. We've got to leave the drama and negativity to the past. We need a new generational conservative leader that's going to focus on what it takes to really get America back on track. I was a 2-term governor that took a double-digit unemployment state and turned it into an economic powerhouse. I was at the UN. I didn't deal with one country. I dealt with 193. I'm not a lawyer. I'm an accountant. I think it's time that we get our fiscal house in order, or close our border, make sure we have law and order, get transparency in the schools, and have a national security that will keep Americans safe.
She's fresh off the debate stage and with us here on Bloomberg, former governor, former ambassador Nikki Haley. We thank you for the time this morning on Bloomberg.
Go to NikkiHaley.com and join us.
Okay. On that note, thank you to Bloomberg's Emery Hordern and Joe Matthew. Speaking, of course, there to former South Carolina Governor Nikki Haley, former ambassador to the United Nations. Coming up, we're going to take you back to Jackson Hole. ECB Governing Council member Mario Centino joining us next from Jackson Hole. This is Bloomberg. Let us take you back to our question of the day. The markets are focused on it. Jackson Hole is upon us. What is the buzz, though, in Jackson Hole? Joining us now is the Bank of Portugal Governor, Mario Centeno. Governor, thank you very much indeed for joining us. We are waiting to see what is going to come out of Jackson Hole. You are one of our first conversations. What do you think the buzz is going to be? What is it going to be that people are talking about there? Is it going to be mission accomplished? Is it going to be higher for longer? Is it going to be those PMI numbers that just came out of Europe?
Well, thank you. Thank you for having me in this beautiful scenario. Well, this is just starting, but I can tell you that we are going to be focused, of course, in the numbers for the economy, in the numbers for inflation, following up on what has been so far the monetary policy transmission that it's already in the numbers. We have to be cautious this time around because downside risks that we identified in June in our forecast have materialized. This is an inversion of what happened throughout the pandemic recovery, because usually we have been surprised in the upside.
Yeah.
This is in part, in my opinion, because the transmission of monetary policy is up and running. We need to take that into account in our decisions.
Mario, it's Alex in New York. So that seems like a pause for September. Would your vote be a pause for September? And if so, is that a peak?
Well, you know, we have been data dependent in our decisions. There's plenty of data still to be made available until the September decision. We have a new forecast. That forecast will tell us precisely how we see this transmission of our decisions into inflation and the economy going on, and we will decide in September on that regard. But it is important to keep in mind that inflation has been falling faster than its way up. We have been successful in our mission so far. It's probably too soon to call it as a down deal, but we certainly will have to focus on these numbers.
You talk, Governor, about the fact that the transmission is now happening, that your policy is now impacting the real economy. How much of what you has done thus far, how many of the hikes that have already been delivered, do you think are impacting the economy, and how much is still to be felt in terms of the policy that has already been raised will be impacting the economy further down the road?
That is the key question for the numbers that we will be presented in September. We know there is a lag. We also know that this time monetary policy had to act very quickly, very fast, in a very short period of time. It is actually the fastest hike process in record for the ECB. And we need to be complacent with that characteristic of the process. So this is precisely what we need to focus in the next decision. Yes?
Mario, I appreciate it's one data point, but the PMIs yesterday were pretty bad, and services rolling over now also with manufacturing. Just how worried are you? How bad could it get?
Well, this is precisely the downside risks materializing vis-à-vis our forecast in June. We need to have that in mind. We need to understand that monetary policy needs to be a stabilizer in the economy. We act because inflation is actually destabilizing the economy, but we cannot be seen in an over and undershooting cycle because of monetary policy. So we need to take those numbers into account. I'm sure that the September forecast will make it.
Governor, do you think there's a danger you've already hiked too much?
I think we need to be cautious. I think we have been measured and reasonable in our decisions. This was a very serious inflationary process coming from a succession of shocks. Actually, this is probably the worst thing about this inflationary process is that it was very lengthy and a response to different shocks. Mm-hmm. We are now seeing inflation coming down, and we need to keep doing our job,
Mario?
providing stability to the markets.
Mario, does China hurt or help you with that? Because a slowing China is going to be hard for growth, but maybe good for disinflation. What's the China risk for European growth right now?
Well, I see the China experience as an instance precisely of this need for monetary economic policies in general to be stabilizing. The deflation process in China is a symptom of the decisions that were taken by the Chinese authorities that were not providing stability to the Chinese economy over all these very difficult couple of years that we faced. Europe, on the contrary, has been one of the big pillars of stability globally. Both in monetary and fiscal policies, Europe has been providing in my opinion, the most adequate answers to the challenges we face. And that's why this time around, Europe is not being pointed as a source of any kind of problem in the world globally. And that's very important, and that's a new thing for us in Europe. We are not used to that, I must say, because in the previous crisis it didn't go that way. But this time Europe is doing things well, and I really want this to continue, and that's something that I believe.
Governor, do you think that there is an ongoing concern that some governments, some countries in Europe still have too high a debt to GDP ratio? And if rates are going to stay higher for longer, do you think that those issues could come to the fore once again? How concerned are you about fiscal spending? How concerned are you about debt to GDP right now if rates are going to stay at a more elevated level?
This is a continuous concern in Europe, but again, in this event, we have not been signaled in any way in terms of any concern for financial stability in Europe. This is the result of the decisions we took prior to the COVID crisis. This is also the result of the decisions we took to face the COVID crisis. Remember that Europe is now issuing common debt in euros. This is a novelty. We implemented the transmission protection instrument at the ECB in July 2022, which is also providing a very firm and clear answer to what the ECB is willing to do to preserve financial stability in Europe. So this time we are not facing these issues. Some countries, for example Portugal, let me advertise a little bit my own country, debt to GDP ratio is going down very, very fast. If you had the fiscal deficits of the US and Europe in the years 2021 and 22, you see that the US has 15 percentage points of GDP higher deficits than Europe. So also the fiscal dimension in Europe played very reasonably, to the point, focused. We need to continue that way. It's a battle that we need to continue fighting.
Mario, we really appreciate your time. It was just such a beautiful, beautiful backdrop. We appreciate you joining us. Thank you. Mario Centeno, ECB Governing Council member. We hope you get to enjoy more time outside. So that's the word on Jackson Hole today. Now, tomorrow, we are going to have an exclusive interview with ECB Governor Christine Lagarde from Jackson Hole. That's at Friday at 4 p.m. New York time. You don't want to miss that. Plus, coming up on the European close, we're just half an hour away from the end of trading over in Europe. And Katrine Peterson of BlackRock's Investment Institute joins us. This is Bloomberg.
Experts, great questions. The countdown is on in Europe. This is Bloomberg Markets European Close with Guy Johnson and Alex Steele.
Thursday, the 24th of August. What are we looking at? We're looking at a European market that has decided that we are post-Nvidia and pre-Powell. That is kind of the story that we're looking at here. We're watching the stock 600 fade. The ASML story, I think, is really emblematic of all of this. This is the company that makes the chips that the equipment that makes the chips. And look at it, it's down by 3.61%. Have valuations run far enough? That seems to be the narrative. We're waiting for Powell. Some of the mining stocks are also on offer as well. Iron ore's been under pressure. The metals generally are under pressure as well. Doesn't feel like the euphoria that we saw last night. Definitely feels that we're looking forward now to Powell. How hawkish will he be? What will be the message? That seems to be the narrative, Alex.
Yep, here in the U.S., you are seeing stocks roll over. Now, it's easy to blame the NVIDIA story, like, hey, it was so awesome, how much more awesome can it get? Therefore, we're definitely off the highs that we saw rolling over a bit. But really, I think it's Dollar Tree. That is the worst performing stock within the NASDAQ 100, which is off by a full 1 percentage point. Dollar Tree had a terrible quarter. Theft, margins, sales outlook, you name it, it was pretty bad. And I find that so interesting because if the economy and consumers rolling over, you would think the likes of Dollar Tree would do really well, theft, for example, aside, but it's not. Guess is doing really well, for example. Some of the other retailers, Abercrombie and Fitch, that you wouldn't necessarily expect. So I find that a little bit confusing. Now, to your point, macro picture, yields higher, dollar higher, except when it comes to the lira, which we'll also talk about. I think it's the higher dollar that's actually pressuring guide. It really leads me to wonder, like, what's the hedge into tomorrow?
Yeah, I think it's really difficult to navigate this one. Is it higher for longer? Is the risk that Powell is hawkish? Is Powell the story tomorrow? Is Lagarde the story? Are we starting to see cracks forming in Europe that need to be addressed? It's quite significant that we spoke to Mario Centeno just a moment ago, the governor of Portugal. I have to say, my takeaway from his conversation is the ECB's definitely done enough, may have already done too much. This is what he had to say about the buzz in Jackson Hole.
We are going to be focused, of course, in the numbers for the economy, in the numbers for inflation, following up on what has been so far the monetary policy transmission that it's already in the numbers. We have to be cautious this time around because downside risks that we identified in June in our forecast have materialized. Yeah. This is an inversion of what happened throughout the pandemic recovery because usually we have been surprised in the upside.
That was Mario Centeno just in the last few minutes, which brings us to our question of the day. What is the buzz in Jackson Hole? And is the buzz different depending on what part of the Atlantic Ocean you're on, what side you're kind of on? Joining us now, Sofia Orta y Costa of Bloomberg Markets Today and Bloomberg International Economics and Policy correspondent Mike McKee. Mike, you're on the ground. What's the buzz?
Basically, the buzz is, as you laid it out, what are the central banks going to do next? And each one has its own concerns, but the ECB and the Fed aren't too far apart in the idea that they have gone a long way. They aren't sure whether they need to do more, and so they're kind of stepping back and saying we're data dependent, which means Wall Street or